So we will be doing the weekly analysis for the upcoming opportunities, week of October date 10 to 14, which is from tomorrow to Friday. Today, quickly, we are going to look into the flashback of the previous week DXY fundamentals. We will also look and review the key events for the coming week. We will look at the individual currency analysis. This is the future markets. We also look at analyzing some of our favorite currency pairs, and then we will combine all that lastly with the inverse paralysis analysis, which is the weak strong analysis. Mr. Timothy Chambade will take us in the section number 5. Today, it's your host Eric and Timothy. Eric, my name is Eric Mbithi, and I'll be taking you through the first 4 points of today's weekly analysis. So, very fast, back to last week. What did we see last week? Last week we had around PMI manufacturing on Monday, which came at around 50.2, which was below the expected figures. However, it also remained steady fast for the future. Let me just go back to our calendar. So last week on Monday we had the ISM manufacturing PMI, which came at 50.9, which was slightly lower than the forecast. However, this is strong enough to show that the manufacturing industry in the US in the coming months will continue to improve. So it was a negative perception of the manufacturing PMI in the US, but it was not that bad. And if we go to the dollar index, you will see we had a 1 or 2 days of slightly strong retracement. Then coming back on Wednesday, we had the ADP. We had the ADP which came out strongly. I think we looked at it in the previous class. We had the ADP, which is here, which came out strongly, and then the ISM services PMI also came out strongly. This was for the non-farm manufacturing industries, and then we also had on Friday, the biggest of all, we had the NFP non-farm payroll coming out extremely bullish for the USD. We had around 208,000 jobs added. The non-farm, which is here, we had 263 jobs added. So all these were factors that affected the dollar in a bullish way. The unemployment rate remained at a steady 3.5%, which is good, and the Feds are trying to take it lower than this. So fundamentally, the US dollar looked very strong last week. Fundamentally, the US dollar looked very strong last week. We are going to see what transpired in the markets because of that information. So I wrote something down for you so that we can start analyzing fundamentals much better. We saw the dollar index jump to 112.5 on Friday after the NFP print came in above expectation, reinforcing bets the Feds will continue hiking rates aggressively. The US economy added a robust 263 jobs in September, above the market expectation of 150. We are also seeing Fed Cleveland said the Fed has to be singularly focused on inflation. So we are seeing most of the Feds are still their focus is more into reducing inflation, echoing remarks from other central banks officials who sounded unequivocally committed to bringing down inflation with more rate hikes, even at the cost of higher unemployment and weather growth. So we see, guys, that with the Feds continuing to be hawkish, it's supposed to affect the employment sector. However, we saw the unemployment rates reduce. We saw 263 jobs added from last month. We also seen the ADP came out strongly. So this means that as much as the Feds are increasing the interest rates, the US economy is still strong. What does increasing the interest rate mean? When the Feds increase the interest rates, it discourages people from borrowing money. Why? Because the money that they borrow from the banks comes at a larger or a higher interest rate than before. So basically, increasing interest rates means reducing the cash flow in the economy. And when they reduce the cash flow, they expect the employment sector to be affected. But this is not happening at the moment. We are seeing more and more jobs being printed every other month. So with this case, then that means the Federal Reserve have a right to increase the interest rates coming this week. This coming week, we are going to have the 4MC on Wednesday night, our time here, East Africa. And then on Thursday, we are going to have the CPI. The CPI is the index that will tell us about the inflation levels. The last time we have, at the moment, the inflation rates in the US is around 8.7%. So even if it drops to 8.5, 8.6, it still does not warrant quantitative easing from the Feds. So we expect these guys to increase their interest rate. We were looking at a 50 basis point interest rate this coming week, but with the stellar jobs printing, we should expect around a 0.75 basis point increase. So Fed fund futures show investors are betting on the Fed key rate reaching as high as 4.6 by next March. So we can see the big money is already anticipating an increase in the interest rates. So we are going to go to our charts and see what is going to happen. Try and break down this information. We see last Monday, the market, the US dollar was retracing, and the push to this trend line of ours was affected by the PMI manufacturing, which came out slightly negative. Then the Wednesday news and the Friday news pushed the US dollar bouncing off this area of support. So this area of support was at around the level of Fibonacci 61.8%. We also had this trend line. So the US dollar has been on a strong uptrend since the beginning of the year. And what we're seeing at the moment is we're seeing the market printing higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this is a classic uptrend for any bullish market. So I do not expect the US dollar to relinquish its control at the moment. Moreover, when we see or we expect the Feds to increase the interest rates next week. So my first targets will be the previous high of 114 level. So I expect the market to go and break this. If we are bullish enough, guys, you know my long-term target is the 120 areas. So for now, for the US dollar, I'm going to be bullish. About tomorrow, I do not expect a lot to happen tomorrow because we have a bank holiday in the US tomorrow. Guys, tomorrow we have a bank holiday in the US. You should expect the markets to be slightly slower. Probably we might only have movements in the Tokyo or during the overlap of London, which is around 10 to midday our time here. After that, I expect the market to be cold. Today I'm going to introduce you to a different aspect of how I look at the markets, which is we're going to technically look at fundamentals of the euro alone. So when I look at the euro from the weekly perspective, euro has been dropping. We've been making a series of lower lows, lower highs. When I speak of a series of lower lows, lower highs, I'm speaking of this. When a market is in a perfect downtrend, it always makes this kind of a structure. So if the euro is this bullish, if the euro is this bearish, and we expect the US dollar to be strong because of the fundamentals, guys, my bet is for this thing to continue tanking. At the moment, the DXY of the dollar index is the only bullish currency out there. Most of the other currency pairs are all bearish, except the US dollar. So I do not expect this to change overnight. And for that reason, I am going to be bearish on euro. And for this reason, I am seeing we have an area of support to come to around here. However, this is around 50% retracement, so we should expect price to pull back a little bit, maybe find resistance in the intraday time frame. I'm going to go to my 1 hour chart. On the intraday, you can see we are at area of support for the 1 hour. So we expect this market to find some resistance here. After we find some resistance, we will have this zone as the possible areas of resistance. And if price is strong enough to break that, we shall be looking at that. So guys, our target for this week is to look for retracements going up and then looking for shorting opportunities. It could come to this level for the euro USD, or it would come to this level. Either way, we should be looking for selling opportunities for euro USD. This is just the futures of euro, and it's telling us that it's extremely weak. So if it's extremely weak and we look on the other side of DXY and we see it's extremely strong, you do the math. We're going to go to the next one, which is the British pound, which is the 6B1. Almost the same thing as the euro. We've seen this thing has been tanking for a while. I think last month we made over 1,000 pips for those who have been attending this Zoom sessions. We made over 1,000 pips in GBP USD. We had a very strong bullish pullback last week, coming to an area of previous support, which should now be resistance. It should now be resistance. And then we saw market pushing aggressively from that from that zone. We saw that the market pushing aggressively from that zone. So looking for selling opportunities for this week, we can see the daily already rejected this resistance with a dark cloud cover and a very, very strong bearish candlesticks. I am not going to enter a sell from here. Guys, if you enter a sell from here, your stop loss is going to be, I don't know, 300 pips. I'm not sure. Yes, your stop loss is going to be almost 480 pips. So for that reason, if we are looking for sales, you go to the intraday time frame. Go to the intraday time frames and then look for a retracement. We see on the intraday 1 hour, we have a very strong or a very beautiful structure coming down, which is at an area of support at the moment. So this is where you get your signals from. We see we're at an area of support. So if we are to get entries to short, we have to wait for price to pull back. We don't know how far it will pull, and then maybe look for a change of structure and come down with it. So I'll be looking at price to push or to pull to this level, and if it is strong enough, we might pull to this level. So guys, basing on the fundamentals coming out this week, if tomorrow is a US bank holiday, then the British pound is going to be strong, or it will act strongly against the US dollar. Also, since we have the CPI and the FOMC, most of the traders will recline on putting on sales for this pair, awaiting the results from the FOMC and the CPI. So between tomorrow and Tuesday night, we might see the pound rising to these levels that we've highlighted. Then upon the news release, we will see this thing tank back down. And once we tank back down, my long-term levels will be at the previous level of support, which is going to be another 400-500 pips. So that is the analysis for the pound coming this week. Japanese yen, I will stay away from this. This is for people who trade GJ. I'm trying to write it properly. Let me try again. For people who trade GJ, EJ, AJ. When I say GJ is GBP JPY, Euro JPY, Odd JPY. I'll be very, very careful with this. Why am I saying that? The yen is extremely weak, as you can see here from the Japanese yen futures market. The yen is extremely weak. It's been dropping for a while. Now, if I go back and look at the pound futures, it's also extremely weak. If I go back and look at the Aussie index, it's also extremely, okay, not very weak, but it's also dropping. If I go back and look at Euro futures, also extremely weak. So looking at a pair like GJ might be confusing. Yes, last week, I'm going to jump a little bit about from it. Last week, it had this impulsive move to the upside, but this is basically because the pound was also gaining during the same time. The pound also gained while the yen remained weak. This is why GJ went up. So now, if we are expecting the pound to drop, we're expecting the yen to continue dropping, GJ is going to waste your time this week. So it's a pair I won't be looking at. And I think I have shown you the reasons. At the moment, its futures, it's at support. And I will say maybe we have this box here. If it's to pull back, it will pull back and play around here. So not so much. I won't be looking at this week. That's my bias. Basically, because all of these pairs look weak, so we don't know who is going to topple the other. Probably if there's some fundamentals coming from those economies. I'm going to go now to the Aussie. If I look at the Aussie as a currency itself, it's also been weak. And if I look to the left, I don't see a lot of resistance or support, previous support. So I'm going to bet that this thing will drop another 1,000 pips. Guys who have been with us here for the last 1 month, I have been calling odd USD 1,000 pips down. And when I look at this odd, at the odd currency itself, it looks weak. When I look at the US dollar, it looks strong. So combine those two, 1 weak, 1 strong. We are going to drop down, guys. If I'm to look for opportunities, I will go to the intraday time frame and then wait for retracements. Wait for what we call the ripples last time. So it's coming down, the waves and the tides are coming down, but the ripples will be going up. So that is what we shall be waiting for to short, either at this point or if it's strong enough to this level here. Let me look at gold. Again, gold is affected by the fundamentals in the US, and anyone who has been following us should be very happy because last week, I'm sure most of you made money from gold. We called out these levels for gold. When it failed to retrace from our previous resistance down here, which was on a Monday and Tuesday last week, it pushed to this weekly, daily, long-term trend line. And as it pulled there, it got resistance at a previous resistance point. And if we went down to the intraday time frame, we saw the candlestick giving us the evidence of that. And I said that I will wait for this zone to be broken, and then I enter my shorting opportunities, which was this point here. And as you can see, we broke it, retested it, and came back down. So for gold, I expect the same to continue. So for anyone who is in shorts, please maintain your shorts. Probably we might pull back tomorrow because of the news. We might pull back. So if you got a very nice entry, ideally your stop loss should be up here. For gold, I will have my stop loss up here. I'm going to write it as SP. Is it ST? ST, yeah. Stop loss. I'll have my ST around there because I expect the market to pull back, come back for some liquidity here before we drop back down. However, if you're in good profits, you can close and then wait for market to pull back here from structure and then short it. Long term, I think gold is going to come to 1550s. As you can see, I already have my zones. Gold is coming down here, guys. So for now, we just have to wait for the fundamentals to come strongly on our favor. That is the CPI and the 4MC minutes, and then we will see a reaction to the downside. Any question up to now? Any questions up to now? Now let us look at the currency pairs. As we said, we are going to start with the USD CHF. USD CHF has given us money from last week, again because we expected the dollar to become strong. And looking at the daily chart, we are bullish. Long term, I will wait for this resistance to be broken. Long resistance to be broken. Look for any small opportunities with very tight stop loss. Looking for opportunities to buy. Let me delete some of these things so that I can make my chart cleaner. We can see this trend line was broken, so I'm going to remove it and just remain with that horizontal resistance. So we expect price on the daily to break this, retest, and then go back further up. On the intraday, I could go as low as 15 minutes. It's going to be the same thing. I am seeing we are at a level of resistance. This market could pull down to this level because tomorrow, as I've said, we have a bank holiday. So the USD is going to be extremely weak against other currencies. So we expect maybe price to come down to this level, collect buyers or liquidity from here, and then look for a way back up. So that is what I'll be looking for in USD CHF. Long term, I'm bullish. You just have to wait for price to come to us. Don't buy at this point. If you're buying at this point, at least wait for price to break, retest, and then you look for entries with the stop loss around here. But as per now, just chill out. We said that maturity is in trading is realizing that you don't have to keep pulling the trigger. We already know the direction of bias. Let's wait for price to give us the behavioral bias, which will lead to our entry levels. So we wait for price to retest, to retrace back down, look for a formation, could be a double bottom, could be candlestick patterns, look for entry, put your stop loss, go up with it. Odd JPY, I said I'm not going to look at it because the JPY is weak, the odd is weak. So I don't think it's wise to look for opportunities here. We will look into that again when we do our inverse paralysis analysis later. But as you can see, we are at support. Are we going to break it? I don't know. We just have to wait. Whoever breaks this, if odd is extremely weak, it will break, maybe retest and go back down. But I expect price to play around here. We'll wait and see. Odd USD, from our analysis of the odd Aussie as a pair, we've seen it's extremely weak, and the dollar looks to be gaining momentum. So on the intraday is where I will go to look for opportunities here, and I see we have broken our long-term support. So I will wait for market to look for retracement on the upper side and then look for shorting opportunities. That is what I'll be looking for. I'll look for the market to retrace a little bit and then look for shorting opportunities. So we expect a healthy downtrend on the USD, on the odd USD coming this week, something like this. So intraday traders, scalpers, you will have several entries during the week, break and retest of structure as we short. Euro USD. Euro USD, from the fundamentals, we see the dollar again is strong. We expect interest rates to go up. So I will give it for shorting opportunities because the dollar looks to be very strong. So again, just like GU, we expect price to retrace a little bit intraday and then look for shorting opportunities. We could retrace to probably these levels, get a double bounce around here and then look for shorting opportunities. And our first target is going to be this. Our first targets are going to be here. Then the second target is you always look to your left. Always look to your left. Second target is going to be down here. In total, this might be around 150, 200 pips on the downside. Some good pips, guys. It could even go further. If I look at my 4 hours, yeah, if we break this zone, we are coming down here, which is some good pips. Yeah, around 150, 200 pips. That is what I'll be looking at for the Euro USD. Again, if I'm to play bigger time frame, just to give you the targets, if I'm to run my Fibonacci levels from the weekly chart on Euro USD, if I'm to play my Fib levels on the weekly chart, I will see that our first target is going to be based on the weekly, the 0% level, and then followed by negative 27 and then 61%. Another trick, guys, I can show you of how to know your targets. Let me do it on the daily so that it can become clear. So we can see that if we are starting from up here, if this is A and then this is B here and then this is C, so this next push here is going to be exactly or more than the push from A to B. Are we together? So if now this is the new A here and this is the new B, ideally this is the C, the retracement. So I expect this market to push down almost similar to the push from A to B. So if this is A to B, so I expect if this market is to short, I expect it. You can see, guys, it exactly fits to our second profit target. That's a trick that you can always use. Whenever the market moves from A to B and then you have the retracement of C, your target levels for your profit can be the same distance market moved from A to B. So you just clone A to B and then you clone it on C going downwards. Then you'll have your values, you'll have your target markets. You can go and try this, guys. It's absolutely perfect. It's interesting, guys. This market leaves a lot of clues as it moves. Leaves a lot of clues. USD JPY, we have seen JPY is extremely weak and the dollar is extremely strong. As I said last week, we were looking for price to break around these boxes, which it did. However, for proper confirmation, we had that resistance line. So we are waiting for price to break it before we look for buying opportunities. So for that reason, we will go up, maybe find some small resistance, come back down, break it, retest, and then further go back up. So let us look at the long term, the all-time high for USD JPY. Are we now? Ah, So if I look to my left on the monthly chart, we have some resistance at 160. Then from 160 it's all clear to 260. Guys, this happened in 1985. The last time that happened is it was in 1985. Some of you guys are scared. 1985, that is almost 37 years. We saw GU doing the same thing last week. GU dropped to the lows of 1985. So it wouldn't surprise me if if USD JPY went to those highs. So for now, we're just going to play it by ear and wait for these zones to be broken, retested, and then we look to go further up. My first target is going to be 160, which is around 1,000 pips. Guys, around 1,000 pips. This can happen before the year ends, because I don't expect any weakness from the US dollar until at least the first quarter of next year. So we could be seeing 1,000 pips in the next coming 2 months. USD card. Doctor, I know this is your favorite. USD card. It looks a little bit confusing for me for now. The numbers coming from Canada were also not bad. So, however, I'm still biased on the dollar being strong. So I'll wait for this level to be broken, retested, and then go further up. But it's something that I will not be looking for this week. I'll just be looking for that probably in the intraday once we break that level. Once we break this resistance level on the intraday, I'll wait for price to come up here and then go up with it. Does buying it right now make any sense? Let me see. Guys, sometimes you have to be, you have to choose what to get yourself into. Are you seeing? It's just 70 pips to the next resistance level. Maybe for a scalper it will make sense, but for me as a day trader, it doesn't really make a lot of sense. So I will wait for this zone to be broken and then go up with it. However, since it's an area of resistance at the moment, maybe price will pull back a little bit. Come back to this support zone, collect momentum, and then go back up. So that is what I'll be looking at. Guys, I think I've exhausted most of the pairs people trade, unless you have a special pair that you want us to look at. So, Mr. Timothy, feel free to come in with strong week analysis, and then we combine it with what has been happening. Oil, somebody wants oil. If you've been following oil, you know that there is some tension between OPEC and the US and all that is leading to oil, the prices of oil going up. I have not looked at oil's chart, but from the fundamentals I follow, we expect oil prices to go up. Let us look at it closely. Wow. So you can see this is the whole OPEC US thing. We see on the daily chart, we broke through this resistance line strongly. The market has not even retested anything. So as it looks, we might be pushing to these levels up here. But on the intraday, I will go to 15 minutes because the market looks to be strongly bullish. I'll go to 15 minutes or even lower and then look for opportunities, because this thing looks to be very, very strong on the bullish side. So I will look for this kind of information. Why am I going to the 15 minutes? Because we might not get retracement because gold looks to be, oil looks to be very, very, very bullish at the moment. So if you want to take advantage of these buys, I will go to the micro intraday time frames, which is 15 and below, to look for buying opportunities to this resistance area. This will be my target for now as we analyze what happens from the other guys. Let's look maybe at the weekly chart and we see if we have more momentum on the weekly. On the weekly, we have a morning star. And this morning star has engulfed 1, 2, 3, 4, has engulfed almost a month times a month information, a month's data. I don't know how I can say it. It has engulfed information or price that is worth a month. That is very, 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 very bullish. Yes, we have a neckline here, the previous neckline, which resulted to the sell-off. So we are currently approaching to that neckline. If we break that neckline, then I'll be bullish for oil to the previous highs. So that's what I'll be looking at, guys. So for now, play it by the intraday time frame. You already have the values we are looking at, but long term, if this zone is broken, then we are going to the previous highs of, was it 120? I can't remember. I think it was around 120. Yes, 120. So the person of oil, I hope I've answered you on that.